All right, traders, it is the moment you've all been waiting for, our AMA session with Dr. Brett Steenbarger. First, you know me, you know Anne Marie. Anne Marie is my co-host and the author of the trading book as well as the trading book workbook. Anne Marie is my emotional support person here today. Thank you very much, Anne Marie, for that. And finally, folks, our guest here is Dr. Brett Steenbarger. Dr. Steenbarger is a professor of psychiatry at SUNY, Upstate Medical University in Syracuse, New York. He's the author of several books, several blogs, several articles. If you don't know about him, you're going to learn a lot today. I can tell you that much. But some of his books, The Psychology of Trading, Enhancing Trader Performance, which I keep handy on my deck because I'm a trader that always needs performance enhancing. We've got the day trading coach. We've got a trader's guide to self-discipline. If you have not seen his blog, it is fantastic. It is traderfeed.blogspot.com. Always some really good stuff on there. I've got some questions from the blog right here, but we're going to focus on your questions first. Dr. Steenbarger, how are you? How have you been? Happy 2025. We're so happy to have you with us. How are things going for you?
Busy, busy, busy. Happy 2025. There are a lot of cross currents in markets, a lot going on because of political changes in the U.S. and the potential impacts that might have not only for us but for the countries we trade with. And so that's very much affected the flow of funds from hedge funds and larger institutions, which affects the markets we look at. So it's been a challenging time and a busy time so far in the new year. Right. And by the way, Hoag, I have a new book that will be coming out this year called Positive Trading Psychology. And it's the application of positive psychology, the study of our strengths, and how we can apply our strengths, what we're really good at, how we can best apply that to our trading. So instead of just trying to correct our mistakes and our weaknesses, who are we at our best? What do we do really, really well? And how can we bring that more and more and more into our trading?
Love that.
Well, you beat me to it. I was just going to bring up the 2025. You have a new book coming out. Thank you for letting us know about that. And Anne Marie, how are you? You ready for the questions? And we'll see what happens here.
Absolutely. I'm so excited that you have questions from the blog too, because I'm an avid reader of that blog, and I've been an avid reader of that blog, I bet, for 15 years. I've been reading that blog. So website address has never changed.
There is a library of things to read in that blog. Absolutely. All right. Without further ado, I've got all the questions, and I've kind of grouped them into sort of categories. The first category I think we're going to address is about practice and emotions. James is part of the question, and I'm going to add Eric to this as well. Thank you for visiting us, Dr. Steenbarger, of course. The question is, they say you shouldn't trade on sim too long, that it could be detrimental to your trading. Do you think there would be any risk of detrimental side effects if we traded in combines, trading combines too long? In my case, I've been trading in combines for a few years before passing my first one. And Eric kind of adds, I think, a little bit something to this question. In his question, how do we ignore the money part of trading and take emotion out of the way? Big questions.
Yeah. The issue of sim and combines, it's very, very important to make all our mistakes when we are least financially vulnerable. And so there's real value in that practice process. Now, obviously, at some point, we develop some good practices and we have to put real money on the line and deal with the real emotions of having real money at risk. So we can't stay in simulation mode forever. But the audience might be surprised to hear that even very successful traders that I've worked with at hedge funds, when they start trading a new instrument or when they start trading a new strategy, they go into sim. Here they've been successful for years and years and years and years, but they are not too proud to go back to being a noob and making all their mistakes and getting a feel for the markets and the strategies they're trading. And then they, of course, ramp it up in terms of the risk taking in a step-by-step way. So not only is it important to trade in practice mode until you get that competence, as you learn and do new things, you may need to return to that practice mode.
No shame in going back to practice, especially when working on some sort of new strategy or new product, something like that. Anne Marie, do you find often that you will kind of return to practice or a trading combine when you're trying to learn some new
Absolutely.
strategy or something like this?
That's where I absolutely go. Every time I'm trading out a new idea, I slip into a combine and I go, all right, let me see how this works. What kind of risk do I have? What kind of drawdown am I looking at? Where are my mechanical flows in the right way? So 100%, I do that all the time.
No shame in it. No shame in it,
Yep,
right? All right.
not at all.
Michael has a question. And I think Michael is really a lucky trader because he knows exactly what his mistakes are. And that's what he says. I know exactly what my mistakes are, and I have clear trading rules. Yet I keep falling back into impulsive decisions. How can I prevent my emotions from tempting me to break my well established rules and develop long term discipline to stick to my plan without exceptions? Now, Doctor, this was one of the things that I was taking out of your blog. You have a little saying, the little blocks of sayings in there, and it says confidence is silent. Insecurities are loud. I've always said that impulses yell at us. Intuition whispers. Do you think that this might be something that Michael could be dealing with?
Yeah, I like that last part, Hogue, about intuition
Yeah.
whispering, because when we are emotional and we're carrying on, we can no longer hear that voice of intuition. And very often, it's that intuition that first alerts us to the patterns that are setting up, creating the trading opportunity. So it's so important not to maintain a positive mindset, certainly not to maintain a negative mindset, but to maintain a focused mindset. Now, I'll address the question in two different ways. One is there are people who have chronic problems with attention. It's a condition that occurs. We've all heard of attention deficit disorder or ADHD if there's a hyperactivity component, but people vary in their impulsivity. And sometimes they need professional help for that. There are medications that help, and there are exercises that can train our focus. I've written about biofeedback, for instance. So it's important to figure out, is this attention and impulse control issue something that occurs only in trading, or does it occur in other parts of my life? If you're seeing it in other life areas, it may be a more general issue that you'd want to get professional help for. So that's the first
Um,
thing.
so,
The second,
Doctor,
go, go,
go
go.
ahead, please.
Well, the second thing is it's one thing to have a good process, to have trading rules, but if you've read Dr. Atul Gawande's book, The Checklist Manifesto, the idea here is that it's not enough just to have general rules. You have to actually codify them in a checklist and make sure that you're following each item of the checklist as you make your decision. A good example would be the pilot or pilots, pilot and co-pilot who are about to take off on a flight, cross-country flight, and they have to check all the mechanical systems, they have to check the fuel, et cetera, et cetera, et cetera. And they have a checklist to do that because if they miss one thing, it could really impair the flight. So you want to be like them and have a checklist for how you generate ideas, how you translate those ideas into trades, how you size those trades, how you manage the risk, how you take profits, et cetera, et cetera, et cetera. Once that's written down, you can follow that step by step. It helps keep us focused.
I, of course, that makes complete sense. I mean, we tell people all the time that they have to have a plan. They have to be as close to if this then that type of situations when we're thinking about taking a trade. Anne Marie, you've known me for a long time, and you've probably heard me say 100 times that the best trades seem to be harder to take. It's the trades that scare me a little bit, that are where I'm maybe feeling that intuition versus the trades that I'm getting yelled at just to take because I'm afraid I'm going to miss something. Do you find, Anne Marie, that some of the better trades you take are the ones that frighten you a little bit, and those are the ones where you're kind of feeling that intuition?
That's a really good question. I think more often it's the impulse control that I end up coming to. It's the, oh my gosh, I got to take this trade. And your words just a second ago, intuition whispers and impulse yells.
Yes,
That's 100% what happens to me. If something's yelling at me, I go, you better sit on your hands for just a hot minute.
exactly. That's when it looks like a layup to me, it's probably going to be a bad trade. And it's those layups that yell at you, don't they?
Yeah.
All right. Doctor, moving on from some of the practice and emotions, I've got a category here: greed, fear, and regret. And Sue asks, can you discuss the role of greed in trading and how it leads to losses? And she says, of course, thank you for taking my question.
Happy to take the question. It's a good question. Greed comes from need. In other words, I get greedy because I need profits. Now, maybe I need profits financially. Maybe my personal situation is vulnerable in the financial sense, or maybe I need profits because I'm not feeling all that great about myself in other parts of my life, and I need that for validation. But greed comes from need. There's some need that we're trying to fill with our market activity. Now, if we're trading partly out of personal need, then what's the one thing we can't do? We can't not trade. If our trading is meeting our needs, we have to trade. We have to make money. And that greed keeps us not only trading, but over trading. So the idea is to step back from the greed to say, okay, what are my needs and how can I get those met outside of markets so that I can just focus on what is happening in the markets in order to find my opportunity.
I'd like to ask a
Now,
follow-up question there, Hoke, if that's okay.
please do.
How do I know the difference between my needs and my wants and how those drive my behavior?
From my perspective, they feel completely different. Different. My want is to trade well. My want is a process goal. It's not a need that's churning within me. And because I have the want of a process goal, I'm free to not trade if nothing is setting up. But if I'm feeling an urge, a need, an emotional pull, then to satisfy that, I've got to trade. And that leads to the overtrading.
Um,
Thank you.
would you say I mean, everybody's different, right? And there's lots of personal needs that people feel that they need, and if they taking those personal needs and bringing them into trading, that's of course going to be a problem on its own. But if you get down to the real basics, would you say that having an income stream outside of trading may be able to alleviate some of that need to make money in trading and allow you to be a little bit less needy in your trading or greedy?
I'll be interested in your take on this, Anne Marie. I learned trading while I had a full time income, and it took all the pressure off because then I was free to make the normal mistakes that a new trader makes. And I also didn't have the pressure of needing to make income to support a spouse and to support a family. So having a secure income or savings while I'm learning the ropes, that took away, I'm sure, 3/4 of the emotional pressure that I otherwise would have felt.
Yeah, that's a
I t-
great answer.
I tended bar for 8 years when I was learning how to trade, just to make
Yeah.
sure the bills were paid. Just to make sure the bills were paid. Anne Marie, what are your thoughts?
Well, for me, I started with a ton of money. And I said, how hard could this be? Because I'd had two successful careers. I
Hmm.
parlayed them. I'd lived well below my means. I always have lived well below my means, always saved a lot. And I thought, oh, this is my next adventure. I'm gonna be successful at the first pass, and it's gonna be nice and easy. And my desire to be a winning trader created a lot of very bad habits. And so I didn't have a financial need, but I had a physical, emotional need to go, I'm Little Miss Hotshot Trader. And it would make me expand my risk. And so that element there really ends up being the same thing. But my want was well outside of what I needed. I didn't need the money because I'd lived well below my means for years and I had a lot of it, and I said, "Oh, okay, well this is my next step. This is what I want to do." And so I was just all about how can I be Miss Hotshot Trader, and then I realized I didn't know how to trade. Shouldn't really
Well,
go in that direction.
you were used to seeing success in everything that you had done. And when it
Yes,
came time to trading, you thought, well, I've always been successful. I'm going to be a
exactly.
master at this. And it's far more difficult. They
Yeah,
say it's the
yeah.
most difficult way to make easy money. And eventually
I would
everybody
agree.
seems to find that out, right?
I would
All
agree.
right. Peggy has a question, a little similar but different than the previous one. Hi, Brett. I have a hard time taking profits, always thinking it could go higher. Also, regretting when it does. Please help. I'm thinking regretting if it does go higher. Are you making too much money on these trades, Peggy? Kind
Maybe
of
he's
my thought
closing
about how I
out.
read this question.
Well, a number of the portfolio managers I work with, it's not an all or none thing, and they set first targets, second targets, third targets, and they will exit as the trade goes their way. They'll exit a third of the position, a third of the position, a third of the position, for example. And so what happens is they take profits on a part of their position quickly. They move their stop up at that point to break even. And then the remaining 2/3 of the position are sort of like a call option. They're either will make money or that could get stopped out, but they've already taken profits on a piece, and
Hmm.
so they are, in a sense, if you think about this, they are diversifying by volatility. What I mean by that is, if we are in a lower volatility market environment or a lower volatility move, then the position goes our way and can easily retrace. In a low vol market, we're not going to extend and extend and extend with Momo.
Hmm.
So part of their position is positioning for lower volatility, but part of their position is positioning for the momentum move. So they're diversified in that respect. Now, could they have made more money by just holding on to the whole thing? Yes. Could
Right.
they have taken profits on the whole thing? Yes. But they rehearse a mindset where it's best to be diversified, take some profits quickly. Good enough is good enough. And the goal is consistency of profitability, not absolute profitability.
Oh,
Oh,
that's
I've never
gold.
heard it put that way.
Yeah,
Absolute
right?
profitability.
Yeah,
That's that's
I
very,
know.
very interesting.
Gold. Yeah.
All right. Here's one, Fernando, and it's still kind of in the fear and greed and fear and regret kind of segment here. We're going to move on from that, I think, a little bit here shortly. But Fernando, I grew up poor and still have innate fear of losing money when it comes to live markets, but also wish to become more psychologically in tune to not being so fearful and greedy when I do start stepping closer to profitability. What are some of the mental exercises that I could use during my trading process to help me keep my mindset present and not stuck in the past and future? Present, staying in the present.
Yeah, and
Any
that's staying
thoughts?
in that staying in the present is something we practice when we're in simulation mode and so forth and so on. And that can be very, very helpful. But I'm going to respond from a different angle. And this is something I think we touched upon in a previous program. And that is, and this is related to the positive psychology that my new book will be on. It's called a solution focused approach. In a solution focused approach, study your best winning trades. Now, I hear you loudly and clearly. There are lots of trades where you're getting frustrated, you're not trading well, but not every trade is a disaster. Not every trade is filled with negative emotion. When you are profitable, when you trade in a focused way, you want to study what you did right. How did I do that? How did I not get distracted by greed or fear? How did I take profits at the right time? It's what we do when we're successful that defines what we call our best practices. And so, working on ourselves is not correcting the negative, but doing more and more and more and more and becoming more and more consistent with what we are already doing well. We're just not doing enough of it. But what we're doing well, we want to learn from that and build upon that foundation.
Accentuate the positive.
Build on that. That's you. Those are your strengths. Build on those.
It's got to be. I mean, we've been. I mean, I had the benefit of having a couple of trading psychologists in the past, and it was always kind of drilled into my head. Don't just focus on what you're doing wrong. Focus on what you're doing right.
Right.
Maximize those. If you sit there and think about all the things you're doing wrong, it's depressing. Give yourself a break. Think about some of the things that you're doing well. Fantastic, fantastic question. This person is Michael, and he's wondering if he should quit trading. He's passed untold number of trading combines. When he gets to the XFA, usually only lasts 2 days, the longest maybe 4. He's only had one payout, which has probably been exceeded by the number of accounts and resets that he's had. Usually, when I throw on a trade, I find myself in profit, $700 to $1,100, but I hold it because I don't want to exit early due to cowardice. But I go from being in profit to having the trade turn back on me to the point where it goes negative. What's my deal? Should I quit trading? If you're trading multiples, Michael, I can tell you right now, I think that the doctor may say, take profit off on part of the way to your target there and see what happens with the rest. Maybe that would be something that would help, doctor.
Yeah, absolutely, Hoga. And if he's doing well during the combine, then again, he wants to study the hell out of what he's doing well and create rules around that because that's what he's going to bring to his subsequent trading. What's happening is it would be the equivalent of a player in practice, a football player or a basketball player in practice who's doing the right thing. And then in the game, they get caught up in the score and how much they're going to win by, and they stop doing all the right things. So you want to really, really drill and drill and drill what you're doing right when you're successful in the combine so that those become very concrete standard rules that lay the foundation for your consistency once you're trading more of your own
When you can
capital.
make real money.
Yeah.
So it's
The rule the general rule is build your consistency first, then build your trading size. That definitely happens at the hedge funds where I work. They assess your consistency of trading, and then they give you more capital, and they give you more capital, and they give you more capital. Be consistent first, follow your rules, and then grow your size.
If I could interject quickly to build on that, notice what Dr. Brett is saying about consistency. A trader that looks at something and says, hey, I'm $700 or I'm $1,100, but I don't want to close early, they're focusing on P&L instead of process. And what Dr. Brett is focusing on is focus on the process. The P&L will follow you. So that's the only thing that I could see that was glaring. If someone says, hey, I'm making this, but I don't want to close because I feel like I'm a wimp, I'll paraphrase there. They've got to focus on process, not P&L.
I love that. It's kind of like dance with the one you brung. If you were successful
Exactly.
trading in the trading combine with consistency, bring that with you. Bring that with you. Right. We're gonna move to is it me or is it the markets? I've got a question here. Jacobo says thank you and wanted to ask. He started adding bookmap and footprint to his trading plan, and the results are decreasing. Notice how I make hasty decisions, and based on what I just see based on what I just see, I just justify my decision. So, based on what I see, I just justify my positions. I had a very mechanical plan, which I always knew what to do. How do you manage the fact of mixing this? Jacobo added a couple of tools. Performance has been declining. Thought that he was doing pretty well before, but still wants to add these two to the mix. How does he do that? I almost feel like if it's not broke, don't fix it. But doctor, what say you?
Yeah, I like the idea of finding new and better tools, but it takes a while to learn those and to become good at those. Now, am I mistaken? Are you going to be talking with some friend of mine named Jim Dalton?
On Thursday, yes, we are going to be talking to your buddy Jim.
That how did I not? Well, he has some new tools for people, and he's been using market profile successfully for a number of years. And as I shared online, when I was in Chicago and working at a prop firm, when we started a training program, it was grounded on them learning a new tool called market profile and based on the writing of Jim Dalton. But it's a whole different way to visualize market activity. It's a whole different way of visualizing breakouts and uh, mean reverting markets and trends. And so it takes a fair amount of practice to get good at that tool. Once you put in that practice, you literally are able to see things in markets that you previously would not have seen. So I do think it can be a worthwhile investment. I personally would not want to learn multiple tools at the same time. I would want to take one at a time, get good at it, internalize that, and then consider other tools later on. I think that could make the learning curve more doable.
Yeah, it's kind of like you can do anything, but you can't do it all at once. Focus on one, get good at that, then add the other one. Um,
100%.
Gary
Yeah, if
wants to
I'm
know.
I'm a
Oh, I'm sorry.
mechanic,
Go ahead, doctor.
if I'm an auto mechanic and I get a whole new, better set of tools, that's exciting. And I could become a much better mechanic as a result of using these better tools. But it's going to take me a while to learn those and get good at those. And so you want to put in that learning time um, in order to build your skills.
Well, I've had some dealings with mechanics lately, and we're deeply in need of mechanics. So if you're looking for a second stream of income, become a
No
mechanic. 'Cause, man,
kidding.
we need a lot of them. uh, Gary wants to know, when do you know it's you if it's your trading? It, when do you know it's your trading badly? When do you know if you're trading badly versus when the market is not cooperating? It's kind of hard to say, but how do you know when you're trading badly, or is it the market? Well,
I know I'm trading badly if I'm distracted. And it doesn't matter what the source of distraction is. I can tell when I'm relatively focused. I can tell when I'm relatively distracted. And that to me is a key piece of information. Markets can be tricky, markets can be difficult. I thought yesterday's market, where overnight we really plunged, there was the news about the AI coming out of China. There was also news about potential tariff wars involving Colombia, and we really sold off. But then, as the day went on, we actually saw some parts of the stock market outperform value relative to growth, for instance. And what started as looking like a trend day, an impulse day, ended up being a rotational day. So sometimes the market throws curveballs, sometimes the market changes midstream, and we want to be attentive to that. We want to be open minded. What do we expect from the market? What's actually happening? If you were trading yesterday, you would have looked and said, well, wait a minute here. The Dow stocks are going into positive territory.
right.
WTF. If this was supposed to be a trend day to the downside, that should not be happening. So at times it's the market. is throwing us a curveball. And by looking at the different parts of the market, by looking at different markets, we can assess that. But sometimes it has nothing to do with the market. I'm just distracted. Other things on my mind, and I'm not fully focused. And so I need to step back and get myself into the right mindset.
Anne Marie, did you have something you wanted to add to this?
No, I think the only thing I would add there is you have to, when you set up a trade, you have to have something in your mind that goes, if I'm wrong, this is likely to happen. And if
Mhm.
that happens and you get stopped out, you have to go, okay, is my underlying suspicion about what should be happening today actually what's happening today? And be
Mhm.
willing to recalibrate. And that's what I lean on into Dr. Brett saying be present and be mindful in those spaces.
That's why I always say be creative. Just being creative enough to accept the information that has changed in the marketplace strips a lot of people's gears. It takes time for humans to adjust to that new information. And hopefully you can make that adjustment before it costs you too much. Um, Doctor,
Absolutely.
you had something you wanted to add to that, please.
Yeah, there's a book that's out fairly recently. Tom Hogard is the author.
Yeah. Best winner loses.
Best loser
Yeah.
wins.
Best loser wins. Yeah.
Yeah. And so, are you, this is really a follow up to your point, Anne Marie, are you doing a good job of being a loser? Are you doing a good job of recognizing when your idea is not playing out and stopping out appropriately, not losing too much money, maybe even learning from the situation so that it helps you with the next trade?
Doctor, while we're on this subject, I kind of feel like this is creativity, accepting information, flexibility is what we're really kind of talking about here when the market state changes and we have a difficult time recognizing that. There's another snippet in your blog that I found very interesting and I want to get your take on this. It was a quote from David Burkus. Creativity doesn't just love constraints, it thrives under them.
Hmm.
What does that mean?
Yeah, so the idea of creativity by constraints means that we create artificial limits, and that pushes us to think about a problem or a challenge in a new way. So the example I used on the blog is, what if I could only place one trade per day? Okay. Well, if I'm only going to trade once a day, it has to be a significant trade. It has to be a meaningful move. I'm not just going to scalp a tick here. So, what would I look for? What rules would I follow? How would I know that something is the trade of the day? It forces me not only to think about the market in a different way, but to actually develop a way of trading the market differently to make the most out of the one trade. So, creating that constraint helps us think in new and different
Yeah,
ways,
that's
which
good
is the
stuff.
essence of creativity.
I love that. It's
Yeah,
like
me too.
here's a straw, a piece of crepe paper, and a twig. Make something beautiful out of it.
Right, right. Exactly.
Exactly. Yeah.
Yeah.
I love that.
Yeah, me too. Me too. Good
Love that.
stuff.
Um, here's a curveball. Pearson wants to trade on the institutional level. What steps could he take to prepare for that level of trading?
Wow, that's an interesting question. So, institutional level, I'll respond with the institutions I work with personally and realize that there are many, 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 many different financial institutions, and market making for an investment bank is very different than running a portfolio for a hedge fund. So, there are lots of different kinds of quote unquote institutional trading. I work with hedge funds predominantly, And the important thing to recognize is that the hedge fund portfolio managers are managing large amounts of capital. At the fund where I started years ago, the minimum allocation, the minimum amount of capital that you would be trading was $200 million. Yeah, 200 million. So when
Can
you
I
have
just
200
can I just take a check for that and go?
exactly. I don't think you could just take the investor capital and run. Yeah, there's a legal and compliance team that would not like that. Um, but, so if you're trading many millions of dollars, you aren't going to just say, okay, I'll buy the S&P here and sell it there. You now think in portfolio terms because you need to have diversified bets. So yes, I might want to be long stocks, but at the same time I'm long stocks, maybe stocks are going up because they're anticipating growth. Maybe the anticipation of growth could be impacting expectations about inflation. And so I'll have another trade in fixed income in the bond market that will express my view in a different way. And maybe I have a totally different view about strength in one country versus another country. And so I'm going to buy that country, sell that country. So I'm creating new ideas, different ideas, and putting them all together in a portfolio. That's called portfolio management. And to trade at an institutional level, you really have to learn to think and to trade in portfolio terms.
So what we say all the time, I mean, the longest of time frame traders, the institutional traders, aren't just outright long or short anything. They are hedged in all over the place in all different kinds of products. To be an institutional trader, I think I'm not. I don't think I'm smart enough. Any institution that would have me as an institution, I probably wouldn't want to be in. But I mean, you've got to be, you got to understand macro, micro economics. I mean, these traders aren't just naked S&Ps or the Nasdaq. They're hedged all over the place, and it seems very complicated to me as a day trader for to even think about something like that.
Yeah, it's a different game because they're trading less often. Certainly they would look at a scalper who's looking at order flow and second by second changes in order flow, and that for them would be very complicated, and they can't do that. But realize that you learn the institutional game by starting out at the first rung of a trading institution. So at a hedge fund, you would begin as a junior analyst and you would be responsible for covering a certain market or a certain strategy and gathering information and making recommendations about trades. And while you're in that junior role, you're observing the people who are doing other strategies, other markets, who are doing portfolios. And so literally you learn the business from the ground up. And that's how people learn,
Mm.
quote unquote, the institutional aspect of financial markets.
Again, you can do it all, but you can't do it all at once.
Right. It's crawl, walk, run.
Mm.
Yes.
Little trust thing here. Eli's got a question, and process over profit, something we hear a lot, is crucial in trading. But it is really hard to do so when you still care about the outcome. What would you suggest as an exercise or mindset that would help with disassociating from P&L? Process over process, great words, hard to do. Any suggestions on being able to kind of disassociate from P&L? I mean, the best trader I've known said, I learned how to make good trading decisions. The money's a byproduct. And if to be able to do that is something that I think very few people are able to do. you have any suggestions for people to help disassociate that P&L from the process?
Yeah, and I don't think anyone totally dissociates. People want, we're all achievement oriented, and profit, certainly is something we want. But again, it's back to that question about trading out of need. That when we can't separate ourselves from the P&L, it's often because we have some psychological need or some financial need regarding the trading. And so it's easiest to separate myself from my trading results by focusing on the portfolio called my life. And what are my other investments in life? Like my relationships, my family, my personal activities. If we are getting a lot of gratification, satisfaction, and fulfillment from the various areas of our lives, then we don't intensively need to be profitable in our trading all of the time. And that helps us get a certain measure of distance.
This really, I think, does a nice segue into the next question, which is from a doctor, Dr. Raman. Says, "Hello, doc. My question dives deep into my struggle with instant dopamine spikes that I get when with the winning streaks. The kind of dopamine shot we get while shopping online instead of the gradual increase in gratitude we get by physically shopping. I really find it hard to control some of my trades the next day when I get easy trades the previous day. So, in other words, he had a good day. Now it's the next day. He's having a hard time managing his impulses, I would guess. He says, I realize it while trading, but sometimes the urge to get that gratification makes me force more trades when I know I should wait. Any tips on working that out slowly to find my best chance in reducing these unwanted dopamine spikes? Says dopamine on it from a doctor. I figured we'd ask that
Okay, all right.
one.
Yeah, so a couple of responses there. It's a good question. Um, One thing that Anne Marie and I share is, I think, an awareness of how our spiritual development can help our development as traders and our development in life. And we all come from different spiritual traditions and may have different beliefs, but there's something more important than the here and now. And it's helpful for me in working with traders to have in mind, or for me trading, to have in mind, this too shall pass. And it could be profits, it could be losses, but we step back and we realize that what's happening right here, right now, is not the whole picture of life. And that gives us a perspective, that gives us an emotional perspective that makes it easier to not fall prey to the dopamine spikes. One of the exercises I have traders do is they've made money yesterday, they're all excited, and I have them do a visualization exercise, guided imagery. Imagine that yesterday was a bad losing day for you. Think those thoughts, feel those feelings. You really drew down yesterday. Now, in the drawdown mode, is the trade you're thinking of taking right now a trade you would genuinely take? If you're in drawdown mode, you want to make the money back, you want to do well, but you're not going to take frivolous trades. Usually, the people I work with, when they are in drawdown mode, that's when they trade their best, because then they're holier than the Pope. Then they have to follow their rules consistently. So by imagining being in drawdown mode, it puts a different frame on the idea, a more selective frame, so they're not trading out of excitement.
Well, I really appreciate the inclusion of spirituality in this conversation, and I know that you recently wrote an online blog called Radical Renewal on the topic of spirituality in trading. We'll see if we can't find a link to that. If you want to tell us where we can find that right now, Doctor, that would be great.
Yeah, if you just Google radical renewal,
Radical
um,
Renewal.
yeah, um, but it's leadingrenewal.blogspot.com. And it's linked on my blog as well. But the idea here, and I think I might have mentioned it in a previous appearance, the idea here is that you want to trade from the soul, not from the ego. And you want the trade to come from genuine conviction, what you feel, what you see, not from the ego as something that you want to become famous or to become more rich or what have you. And by taking the ego out of what you do, which is a big part of just about all the spiritual traditions, by taking the ego out of what you do, it allows you to trade from that intuition that we call the soul.
Gold.
Intuition is the soul, and it's
Soul speaks to
very
us.
gentle, very
Yeah.
gentle when it speaks to us. It whispers, it hints, doesn't yell at us. Doctor, I know we're getting a little bit short on time. I wanted to just kind of wrap up with one of the things that I read in your blog, Trading as Warfare blog. There was a
Yeah.
quote in there that I found very interesting, and if you would expound on it just a little bit for us. The quote was, "Many of the psychological challenges of short-term traders occur because they operate tactically without an underlying strategy." Can you explain that a little bit for me?
Yeah, and most concretely, short-term traders will look at what's happening on a short term. They'll look at charts on one time frame, and they miss a bigger picture of what's happening in their market. And so they'll see the market going down, and they won't realize that that's occurring within the context, a bigger picture context of a rising market. In fact, what's happening is we have cycling action within a bull market trend. One of the nice things about market profile, and you'll be discussing with Jim Dalton, is that he constructs profiles of different time frames, and so that you can see what's happening on the short time frame, what's happening medium time frame, longer time frame. And so you're combining tactics, which is the short term execution of the idea, with strategy, which is your
The bigger,
participation in the bigger picture. Yes.
I love it. The pitch is a tactic, the whole game is the strategy.
That's right. And in any
Yeah.
sport, you have to practice your tactics. You have to be really good at your
Yeah.
tactics. Your tactics are how you block and tackle. But you still need a game plan. You need a strategy for winning.
Yeah.
So that's a different thing.
Fantastic.
I
Um,
know. Great stuff. Love
I
it.
can't thank you enough, Doctor, for joining us.
Truly.
Please tell
Yep.
us you'll come back
Okay.
and do this again.
It's always a
We
joy.
happy to do that again. And I appreciate all the good questions that people submitted. I appreciate your organizing those questions, and I appreciate the back and forth with both of you. And look forward to coming back. Have a good time with Mr. Dalton.
Yeah, that's going to be fun.
We
I'm
will.
looking forward to
Yeah.
that.
It's
I've
going to be
had the
That'll
fun.
be good.
opportunity to meet him once before. He's always a lot of fun. He's a gentleman. He's very funny and so smart. Saved my life, I can tell you that much. And Brett, I
Just
know I'm
like
looking
you.
forward to your new
Thank you.
book, Positive Trading Psychology. and we're looking forward to that.
Well, thank you.
Anne Marie, always a pleasure to spend
Same,
time with you, and I'm
same,
looking
same.
forward to talking to you soon. Anything else that I'm forgetting? Oh, I did want to also thank all of you, our viewers, everybody in chat, everybody that brought those questions. Great questions. If we did not get to them, I apologize. We will see if we can't get to them to the next time that the good doctor is here. And on that note, Doctor Anne Marie, I thank you from my heart. Blessings to you both, and blessings to you all. And we'll look forward to our next segment, which is hang on. The shoulder tap. Well, I think we're really just going to be doing lunchbox trading. JD is going to join me
Yeah.
as well as Deanna. So we'll see you then. Again, blessings to you both. Blessings to all of you. Trade well, everybody, and we'll see you in just a couple of minutes.